Hi there, Inga.
Good morning, Chris.
Nice to meet you. I've heard many stories about your firm that you're part of, Velvet Investment, and I'm here to ask a few questions.
All right, first of all, Chris, it's my pleasure meeting you. I heard also a lot of stories. I have seen your website, I have seen one of your collections, and I have the same white hoodie Kofi given me when we were on the conference in Saudi Arabia. About the venture capitalists. So basically there is an early stage venture capitalist and later stage venture capitalist. If we are talking about an early stage venture capitalist, well, that venture capital is actually, it's a firm consisted of either professional investors and professional analysts, market researchers, the people who work in the industry and who are let's say, investing others people money. Basically, the structure of the venture capital firm that there is a few people who come together first, and they need and they put some initial capital in to that fund, and then when they have backed up themselves, they start to reach out to either banks, pension funds, family offices, or maybe some private rich individuals who would like to give them money for a certain period of time before they can either cash out with the money they invested, or they can have a certain gain on that money. It's all like put it in the terms and conditions, so it varies, from fund to fund. So, and if the fund turns up to be losing money, then means you are losing money as well. So investing in a venture fund doesn't mean that you will end up earning something. It's basically depends on the people who are managing the fund. So when you are starting to have your own fund, you need to have a credibility from the people, and to prove them that you are the right team to invest their money in, because everyone is looking to succeed. Everyone in that industry is looking to make money. Nobody obviously wants to lose. That's why VCs, they are very strict. So you might see huge global funds that are investing into many industries. But they can be, either region or country specific. Even, some global funds that are based in the US, whenever they are looking into companies in Europe, they have the specific tag that it should be Western Europe. Okay. Because of the more trust and credibility and a more advanced economic system. The size of the funds, they really depends on you're planning to how much money you're planning to invest in every company. So it ranges from an early VC, they can invest from 150K to 300,000 whatever dollars, euros, or British pounds, to probably 1 million to 10 to 20 to 20 million rounds. So it actually depends on how much money they have raised and what is their targets when they are investing into the company. So basically, it's a very traditional industry, and most of the people who are leading the VC funds, they either worked in the banks and financial sectors. So they are so they have the strong analytical and strategic thinking. So this what puts them as a credible people in front of other people. And you know, working in the financial sector, you obviously know quite a lot of wealthy people who are probably will lend you some money if you're first starting. Second thing is a tech background. So many people who were running the tech companies, they also start as venture capitalists, but they have another benefit because they have the tech expertise. And all the companies, they are now moving into the tech fields. So they are doing AI, they are doing blockchain, they are doing metaverse. So this is where you actually need to have an expertise because that will save your investors money in terms of not investing into a scam scheme. And second is a consultant with a proven track record. Proven track record doesn't have to be specifically in the startups. It's good if you've worked with an incubator, accelerator, if you have organized startup seminars, startup boot camps. It is also beneficial, but the main thing is about how many people knows you and how many people knows that you have a successful story behind your back.
Interesting. So
personally, when I look at the startup companies, I first look at the business idea itself. What is it? For me specifically, I don't have any preferences. As others, they are more niche focused. So I'm trying to see how well the idea is worked. Have they really done anything? Do they have something for you to show? Because it's really hard to invest in the idea when a person comes to you and he's saying, hey, like I have this idea and I need a bunch of money because I need to make it happen like next year. Okay, where's the guarantee that you are going to have it next year? That is why second thing is the team, and probably is the team is getting paid or the team is not getting paid. If we are talking about the companies that they are going out to raise their very first money, most likely there is at least 2-3 people company because they cannot afford hiring somebody, and they invest their money, their savings to make a viable product that you can show. It doesn't have to be perfect because you continue developing it, but this is actually one of the reasons why you are raising money. Because if you have the money to develop the full product, why would you go for investments? So this is the crucial things to consider. Personally, I never look at the financial sheets, although I do look at them when I need to. But frankly speaking, the numbers that are shown by most of the startup companies, they are far from being realistic. You can calculate for something, but these calculations are done based on some surface analysis. They are not done on a very deep level analysis, which is basically not needed for a startup company. There's going to be many changes happening during the first 3 years of its life. So the things you need to know is that you need to attract the customers. So whatever happens, even if you're finding your investor who's backing you up for sometimes or not, the first thing you need to think, okay, how I'm gonna make money with it. If you cannot make money, if there is not enough people wanted to sign up for you, then probably you need to rethink, okay, are there any ways how I can do my business to be more attractive to people?